Consignor is the owner, consignee is the agent. Two parties in the sales are, one is the seller, another is the buyer. Proportionate non-recurring expense consignor, total accidental loss minus amount recovered from insurance company, whatever the difference comes, that is the abnormal loss. First one, goods sent on consignment account. Then two bank account, expenses of the consignor. Two consignee account, expenses of consignee. Hello my dear students, I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to have Advanced Financial Accounting Second Semester Unit 4 Session 2 in favor of Accounting for Consignment Transaction. This word, consignment transaction. I told in the last class, consignment is an agreement between the two parties. One is the consignor is the owner, another is the agent is called consignee. Whatever agreement that takes place between the consignor and the consignee, we call as consignment. It's an agreement between whom? Consignor is the owner, consignee is the agent. Whatever the agreement that takes place between the consignor and the consignee, we call as consignment account. So generally, who will send the goods? Consignor will send the goods to consignee. Consignee will sell the goods on behalf of at the risk of the consignor. This is a procedure. So we'll move on now. Difference between consignment and sale. So consignment and sale. In consignment, there are two parties. One is the consignor, another is the consignee. Consignor is the owner, consignee is the agent. Two parties in a sales are, one is the seller, another is the buyer. So here ownership lies with the consignor, ownership transferred to the buyer. The consignee can return the unsold goods, the goods which cannot be sold, to consignor. Goods sold to the property of the buyer, goods sold to the property of the buyer can be returned only if the seller agrees only, he can return the goods. The relation between consignor and consignee is that of principal and agent. The relation between seller and buyer is that of the creditor and debtor. The consignee has no freedom and can sell the goods until suggested by the consignee. He do not have the no personal power. Only if the consignor suggests, they can only resell the goods. The buyer of the goods can dispose of the goods as he like dispose. The buyer, the already goods has been transferred from seller to the buyer. Buyer is almost a owner. If he likes, he can dispose the goods. Whereas here, he cannot sell or dispose the goods until suggested by the consignor. So it's only an agreement. So if the consignor says, then only he can dispose the goods. Here the buyer can dispose the goods. Valuation of closing stock and abnormal loss. Non-recurring expense of the consignor, packing charges, loading charges, carriage, freight, insurance, octroi, dock dues, forwarding charges. Non-recurring expense of consignee. Now, these expenses should be added. Non-recurring expense of the consignee, imports or custom duty, dock dues, unloading charges, octroi, railway charges, and carriage on goods. I will explain why we have taken. So in valuation of closing stock, here at the end of the year, if the goods is not sold, they should be valued by the consignor. Cost of unsold goods, invoice price. Invoice price includes cost plus profit. Add non-recurring expenses. These of the consignor. This non-recurring expense only have to take. Recurring expense just like advertisement, selling expenses, leaving all this. Now what's a general expenditure? It may be discount allowed, discount received, and advertisement, selling expenses. All these expenses should not be considered. Only non-recurring expenses should be considered. It may be consignor or consignee. Only proportionate non-recurring expenses. of the consignor should be added, and proportionate non-recurring expenses of the consignee should be added. Only non-recurring expenses should be added of the consignor. Non-recurring expense of consignee should be added. Valuation abnormal loss. If any loss occurs due to accident, due to fire, that should be taken. Cost of goods damage and proportionate non-recurring expense consignor, total accidental loss minus amount recovered from insurance company, whatever the difference comes, that is the abnormal loss. So, cost of the goods damage and proportionate non-recurring expense of the consignor, don't take the consignee, and minus amount recovered from insurance company, whatever the difference comes. Assume that cost of the damaged goods is about 10,000 and proportion expense to consignor is about 2,000. 10 plus 2 is 12,000 total accidental loss. But we recover only 8,000. So 4,000 is called abnormal loss, we can say. So, see that by chance goods damage is 12,000. So 10 plus 2, 12,000. Amount recovered from insurance company is 8,000. Difference is, assume that it is 10,000. This is 2,000. Totally it's become 12,000. Amount recovered 4,000. 8,000 is called action. An example, if the cost of the goods damage is 10,000, proportionate expense is 2,000, totally 12,000. Total accidental loss is 12,000. How much recovered from insurance company? 4,000. 8,000 is called accident. This is a abnormal loss. Types of losses: normal loss and abnormal loss. Normal loss, which are caused due to unavoidable reasons, are called normal loss. Evaporation, leakage, breakage, losing weight, loss due to loading and unloading. Such losses are inherent and unavoidable and form the cost of business, which cannot be avoided. Which are these? Evaporation, leakage, breakage, losing weight, loss due to loading or unloading. So it is inherent into the business. Abnormal loss, which are caused by accident or negligence, are called abnormal loss. Example, loss caused by fire, floods, earthquake, theft. Not regular in nature. This is very regular in nature. So which are the types of losses are? One is called normal loss, another loss. Abnormal loss is not a regular loss. It will happen due to fire, due to theft, whereas this has happened due to operation, due to leakage is over. It may be loading and unloading charges, braking, losing of weight. All these called normal loss. Abnormal loss due to fire, due to theft, caused by floods, fire, earthquake, theft. It is non-recurring in nature. Then this is a format. This is consignment transaction format at the cost price. Consignment transaction at the cost price we are doing. So first problem, we'll go with the cost price, then we'll go with the invoice payment. Goods sent on consignment. Who sends? Consignor to consignee. Goods sent on consignment is an expenditure. Then to bank account, expenses of the consignor you have to take. Then to consignee account, expenses of consignee. Then to consignee account, commission of the consignee. First one, who sends the goods? Consignor to consignee. Goods sent on consignment is the cost price. To bank account, expenses of the consignor. Then to consignee account, expenses of consignee. To consignee account, commission of the consignee. Come back here. By accidental loss, by closing stock, by consignee account, sales made by consignee. Whatever the difference comes, the difference may be profit or loss. First one, goods sent on consignment account. Then to bank account, expenses of the consignor. To consignee account, expenses of consignee. To consignee account, commission of the consignee. Here, by accidental loss, by closing stock, by consignee account, sales made by consignee, whatever the difference may be, profit or loss. Consignee account, By bank, advance given by the consignee to consignor is an advance. Consignment is a commission due to consignee. By consignment, expenses due to consignee. By if they had given the advance in the form of bill, by bills receivable, advance, then he will make the sale. The amount of sale amount lies with the consignee. So out of the sale amount, no, he will deduct his advance. Consignee deduct. He won't send the amount to the consignor. Out of the amount, whatever the amount he deduct his advance. He deduct his commission. He deducted his expenditure. He deducted his advance. Whatever the difference comes, the difference will be sent by consignee to consignor in the form of a check or a draft. So when you make the sale, the amount lies with whom? Consignee. Out of the amount, he will deduct his advance. He will deduct his commission. Who? Consignee deduct his advance. Consignee deduct his commission. Consignee deduct his expenditure. Then he will deduct in the, by chance if the advance is given in the form of bill, he will deduct whatever the difference comes. The difference is sent by consignee to consignor. Now, goods sent on consignment account by consignment account, which will be entered into trading account. Real business or purchases account, we say. They will ask you in the examination, prepare goods sent on consignment account. So, you have to prepare consignment account. You have to prepare consignee account. Whatever we ask, you have to do it now, consignment account. By chance, accidental loss asked, no, they may ask you if there is an accidental loss. To consignment account, full amount, right? By bank account, amount recovered from insurance company. So total amount of loss, how much you recover from insurance company, whatever the difference is profit and loss. So it is the total loss, enter in the consignment account, how much you recovered from the insurance company by bank account, whatever the difference comes, there is a profit and loss account. This we can find out in consignment account. This will come under working note. We recovered from the insurance company bank account, whatever the difference comes, there's a loss to the consignment account transaction. Yeah. You must remember, goods sent on consignment, only a cost price. Expenses of the consignor, these are all the met by consignor. Expense of the consignee met by consignor. Commission due to consignee. Who has to pay? The consignor has to pay. These are all the expenditure of the consignor. If there is accidental loss, this one, accidental loss account data to consignment account. Closing stock means unsold. Unsold stock. By consignee account, sales made by consignee, by profit difference. No. If the debit side is more, if the difference comes, the credit is called loss. If the credit side more, if the difference in the debit side, it is called net profit. This is a loss, this is a profit. Yeah. When you make the sale, the entire amount lies with the consignee. He will deduct his advance, he will deduct his commission, he will deduct his expenditure, he will deduct his advance which has given in the form of bill. Whatever the difference comes, the difference will be sent by check in the form of check or draft by the sent by whom? Consignee to consignor. This is the goods sent on to by consignment account to trading account. If they ask the accidental loss account to consignment account, by bank account, by profit and loss account. Hope you understand. Very, very simple. And we have given in the first class, I have explained the theory now. Now I have explained the format of consignment account. In the next session, we'll start with a problem of consignment at cost price. About 3 problems on the cost price and the 4 problems at invoice price. Same type, only change is one is on cost price, one is on invoice price. So how to calculate the closing stock, how to calculate the what's called abnormal loss, that you have to find out. So very, very easy. Only format you have to learn. You have to learn the format, that becomes easy for you. So in the next class, we'll meet with a problem of consignment account. Till then, goodbye. Meet in the next session.